I'm staring at a credit report with a FICO score of 627, and it's a harsh reminder that building credit from zero in under a year without a credit card is a daunting task, but it's not impossible. You're probably feeling the same stress I did when I saw that number. It's like a weight on your shoulders, a constant reminder that you're not where you want to be financially. The reality is, 60 million Americans have no credit history, and it's holding them back from getting approved for apartments, loans, and even jobs. So, what can you do if you're one of them? The answer lies in understanding how credit works and using alternative methods to build it. One specific promise I want to make to you is that by the end of this video, you'll know exactly how to start building your credit from scratch without needing a credit card. Let me give you an example. My friend, Alex, who's a freelance writer making $51,340 a year, was able to build her credit from 0 to 720 in just 11 months. She did it by becoming an authorized user on her parents' credit card, paying her rent on time through a service that reports to the credit bureaus, and taking out a credit builder loan from a local credit union. The key was consistent monitoring and on-time payments. Here's a mini revelation for you. Did you know that credit builder loans are specifically designed for people with no credit or bad credit? They work by having you borrow a small amount of money, typically $1,000 to $3,000, and then repay it over a set period, usually 12 to 24 months. The lender reports your payments to the credit bureaus, so as long as you make your payments on time, you'll start to see your credit score improve. Now, let's dive deeper into how you can replicate Alex's success. The first step is to understand that building credit without a credit card requires creativity and discipline. You have to be willing to think outside the box and explore alternative credit building methods. One such method is becoming an authorized user on someone else's credit card, like Alex did. This works best if the primary cardholder has good credit habits, as their positive payment history will reflect on your credit report. Another method is to use a rent reporting service. Not many people know this, but you can actually get credit for paying your rent on time. Services like RentTrack, Pay Your Rent, and eCreditable will report your rent payments to the credit bureaus, which can help you establish a positive payment history. For instance, if you're paying $1,500 in rent each month, and you make all your payments on time for a year, that's $18,000 in payments that can be reported to the credit bureaus. The third method, as I mentioned earlier, is to take out a credit builder loan. These loans are specifically designed for people who are trying to build or rebuild their credit. They're usually offered by credit unions or community banks and can be a great way to establish a positive payment history. When Alex took out her credit builder loan, she borrowed $2,000 and repaid it over 12 months. Her payments were reported to the credit bureaus, and by the end of the loan term, her credit score had increased significantly. Let me share another example with you. Emily, a 28-year-old immigrant, had no credit history when she moved to the U.S. She started by opening a secured credit card with a $500 limit and used it to pay for her daily expenses. She made sure to pay her balance in full each month and monitored her credit report regularly. Within 6 months, her credit score had improved to 660, and she was able to qualify for a regular credit card. Now, I want to ask you, what's the biggest debt you're currently facing? Drop your answer in the comments below, and I'll do my best to provide personalized advice. If you're struggling with debt, you're not alone. Millions of people have been in your shoes and have come out the other side. You can too. It's also important to remember that building credit is not just about the methods you use, but also about being consistent and patient. It takes time to see results, so don't get discouraged if you don't see an improvement in your credit score right away. Keep making your payments on time, monitor your credit report, and you'll be on your way to building a strong credit foundation. If you're interested in learning more about credit builder loans and how they can help you build credit, check out our next video, The Ultimate Guide to Credit Builder Loans. We'll dive deeper into the details of how these loans work and provide you with a step-by-step guide on how to apply for one. In conclusion, building credit from zero in under a year without a credit card is achievable. It requires some creativity, discipline, and patience, but the end result is well worth it. By following the methods I outlined in this video and staying committed to your credit building goals, you can establish a strong credit foundation and unlock better financial opportunities. If this video has been helpful to you, please hit the like button and consider sharing it with someone who needs it. Thanks for watching, and we'll see you in the next video. As you're working on building your credit, it's essential to keep in mind that credit utilization plays a significant role in determining your credit score. For example, if you have a credit limit of $1,000 and you're using $300 of it, your credit utilization ratio is 30%. Ideally, you want to keep this ratio below 30% to show lenders that you can manage your debt responsibly. To illustrate this, let's consider a scenario where you have two credit cards, one with a limit of $1,500 and the other with a limit of $2,000. If you're using $450 on the first card and $600 on the second, your total credit utilization is $1,050 out of $3,500, which is approximately 30%. By keeping your credit utilization in check, you can avoid negatively impacting your credit score. Another crucial aspect of building credit is to avoid applying for too many credit cards or loans in a short period. This can lead to a phenomenon known as credit inquiry fatigue, where lenders become wary of approving you for credit due to the high number of inquiries on your report. For instance, if you apply for 5 credit cards within a span of 2 months, it may raise some red flags, and lenders might view you as a higher risk. To avoid this, it's recommended to space out your credit applications and only apply for credit when necessary. Now, let's talk about the importance of credit mix in determining your credit score. A healthy credit mix includes a combination of different credit types, such as credit cards, loans, and a mortgage. Having a diverse credit mix demonstrates to lenders that you can manage different types of credit responsibly. For example, if you have a credit card, a personal loan, and a student loan, you're showing lenders that you can handle various credit obligations. This can help improve your credit score over time. It's also worth noting that credit scores can vary across different credit reporting agencies. For instance, your FICO score from Experian might be different from your FICO score from TransUnion. This is because each agency may have slightly different information on your credit report, or they might weigh certain factors differently. To ensure that your credit score is accurate, it's essential to monitor your credit reports from all 3 major credit reporting agencies, Equifax, Experian, and TransUnion. In addition to the methods I mentioned earlier, you can also consider using a credit scoring simulator to see how different credit building strategies might impact your credit score. These simulators can help you predict how certain actions, such as paying off debt or opening a new credit account, might affect your credit score. For example, if you're considering taking out a credit builder loan, a simulator can show you how making regular payments on the loan might improve your credit score over time. To further illustrate the impact of credit building strategies, let's consider a case study. Suppose you have a credit score of 500 and you want to improve it to 700 within the next 18 months. You decide to take out a credit builder loan of $1,500 and repay it over 12 months. At the same time, you become an authorized user on a friend's credit card and make sure to pay your rent on time through a rent reporting service. By using a credit scoring simulator, you can see how these actions might impact your credit score over the next 18 months. This can help you make informed decisions about your credit building strategy and stay on track to achieving your goals. As you work on building your credit, it's essential to stay organized and keep track of your progress. You can use a credit tracking spreadsheet to monitor your credit score, credit utilization, and payment history. This can help you identify areas for improvement and make adjustments to your credit building strategy as needed. For example, if you notice that your credit utilization is too high, you can take steps to reduce it by paying down debt or increasing your credit limit. Finally, it's worth noting that building credit is a long-term process that requires patience and persistence. It's essential to stay committed to your credit building goals and avoid making common mistakes that can hurt your credit score. By following the strategies outlined in this video and staying focused on your goals, you can build a strong credit foundation and achieve financial stability. For instance, if you're able to improve your credit score from 500 to 700, you may be able to qualify for better interest rates on loans and credit cards, which can save you money in the long run.